So thank you guys all for coming. This is one of the first events we're doing in a new series. It's a select spotlight series, sort of highlighting interesting topics and companies. And tonight we've actually got a combination of the two, which is pretty cool. So we're going to be learning about Rally Road. These guys are the co-founders, and it's basically a platform that, in short, securitizes alternative investments like this beautiful car right here, and lets people buy shares so that they can participate in markets that historically have outperformed major indices, real estate market, all that kind of stuff. So guys, thank you again for having us.
Thank you.
Why don't we start off just telling us a little bit more about your backgrounds, how you guys came together, and a little more about the company.
Yeah, sure. I'll jump in first. So I'm Rob. I'm one of the co-founders with Max, and my other partner, Chris, is our CEO. Basically, we've all kind of, we've been working sort of adjacent to this business for a long time. Myself in product at a couple of different startups and some app companies, always kind of with the base in product design and design in general. Chris and I, our CEO, went to high school together, and he was always sort of the smart kid, and Max was his roommate in college. He was the other smart kid, and I was like the creative, weird kid on the side. So when we started thinking about what the future was going to look like and talking about potentially working together someday, the idea of sort of leveraging the experience that we all had individually, myself being from design, Chris as an operator, and Max coming from finance, was kind of a no-brainer. And we got a little bit lucky in that as we started talking about really quitting our jobs and starting something new in the process of raising money and building the product, the landscape had dramatically changed. So in 2015, when we first had the conversation about what this could be, it was the start of not just the legal stuff, so like the Jobs Act, which allows for sort of crowdfunding campaigns, and some of the non-accredited investing were starting to take shape. But also people were starting to get used to investing in things that weren't necessarily just pure equities. And it was a situation where you have like the Robinhoods of the world and some of the bigger platforms that exist now were in their infancy, but were generating huge interest. So for us, sitting down thinking what we could sort of create together, building something like this where it's an asset class and asset classes that we really care about, but also leverages all that sort of experience we had, and the friendship that was developing between us as well along the way was like a no-brainer. And I got super lucky in that the banker and the really smart kid kind of took me in and allowed me to hang out with them.
And so Rob's obviously exaggerating on the very smart kid stuff, but he definitely is the very cool kid. So while I was working in banking for 10 years prior to this, watching like what cool kids do from the outside, I was always really jealous. And so, thank you, Carlo, for sort of partnering with us on this, because it's sort of speaking to everyone here in this room that really sort of makes this come to life. For me personally, sort of having been on the sort of more traditional finance side for a really long time, and sort of looking at sort of what the revolution of fintech is doing to traditional finance and how people sort of interact with investments and how they think about investments, and that it's not just like put your stuff into a 401k and see what happens 50 years from now, but sort of taking control and taking ownership of your investment decisions. And that was really something that drew me to the concept from day one. Having been sort of a quite boring banker for a long time, I was really excited to start working with the cool kids. So, Rob was sort of my bridge from wearing the suit every day to coming in, and I took it too far. I came in sweatpants for like a year.
Yeah, he actually wore a suit for a week, and then he started wearing sweatpants exclusively for the week after. He had no in between, so I'm glad it leveled out.
But it was just a really exciting experience for me, because I was able to apply all the things that I'd learned, taking companies public and sort of doing M&A transactions and applying them to things that people actually cared about. And so that's really one of the things that we're all about, is sort of bringing people together around a common investment thesis and letting everyone participate in these kinds of asset classes where they otherwise wouldn't have been able to before.
Awesome. I've been investing in equity since I was 18. I know nothing about collectible cars or how that appreciates as an asset. Like, how do I know that I'm picking the right car? How does Rally Road help with that? And then maybe let's tie it into sort of like what the performance of the sector as a whole has been.
Yeah, so I'll start at the end, and I'll let you take the appreciation, sort of the sector stuff. So when you look at sort of a car like this, it's got this immediate sort of visceral response, and you see it and you understand and realize that when you're in the room with it, that it really is art, and that it's got this really, really unique appeal to it, that it doesn't look or feel like anything else that's available. So what we do is when we try and find assets, we don't just look at sort of the history of appreciation and kind of what is done relative to the markets, to the equity markets, because I was in the same boat. And as a 19-year-old, 20-year-old, getting out of school in the mid-2000s, the only thing available was like a TD Ameritrade account, and Apple was like a hot investment at that point, and some really, really meaningful investments that could have been made, but it was purely equities for the most part. A little bit of options, some other financial instruments, but knowing that there was value around things like this and seeing the headlines was always a driver for more interest. It didn't necessarily lead anywhere though, because there was no sort of easy method of making that investment. So what we do is, when we find a car like this, we're usually looking for it. So we're looking for something that's rare, that's super unique, that has that sort of history of outsized returns, but at the same time is potentially the poster on the wall. It's something that stays relevant. It's something that has really good Google search trends. It's something that's on Instagram that you'll see and understand. Something like this that finds its way into sort of design of fashion and sneakers and stuff that's hyper relevant in the culture outside of just car culture. That's something that is really meaningful from a user acquisition standpoint, but from a price appreciation standpoint too. So always try and find the most unique, the headline grabbing cars, and the price point that makes it affordable for an everyday person, which in this case for this car was $127 a share.
And so if you look at the space broadly, right, there are indices that track classic cars, and you can watch the auctions, and millions and millions of people do and follow this stuff. So you can look at the trends across the sector and see that it's outperformed almost all other asset classes over the last 20 years. So there's sort of a very good fundamental sector thesis that we sort of have as our underlying thesis, right? So when we get from cars into memorabilia, into wine and whiskey, et cetera, over time, all those things are going to hold true for all these other asset classes as well. But when you interact with our platform, we want you to interact with it the same way that you would with your normal sort of equities portfolio, right? So we're not saying, put all of your money into this car because it used to be on your poster, on your wall as a child, as a poster. It's sort of, think of it as a portfolio where you're diversifying across all of our investment opportunities, where you're sort of hedging by saying, okay, this might be something that's a little bit more esoteric, but also might double or triple in price over a very short period of time, versus something else that's more well-known and sort of has a more steady price appreciation. So we want you to be able to build a diversified portfolio within our asset classes, and also do it in sort of a very responsible way. So the price points are low. You can diversify the way you want to. We allow you to trade your shares so that you can get out of your investments when you want to. But really the way that people are using it is like they would an equity portfolio, where they're diversifying and then reinvesting money that they've taken off the table.
That is super cool. So you touched a little bit on other asset classes that you guys might get into. Sort of, what do you see those sectors or asset classes being, and what are you looking at when you're choosing what's going to be next?
Yeah, so we talked about a little bit before the idea that a Jeff Koons sculpture goes to auction and it fetches a price that's 20x what anyone anticipated it would.
That was nuts, yeah.
And you're looking at 30 and 40 and $50 million tickets, and that becomes the headline that gets shared. And it's something that becomes a conversation everywhere you go, and you kind of hear bits and pieces of it in every piece of news media. Anywhere where there's that dynamic of that sort of a really, really insane, what looks like insane price points and huge fanfare around it, but also a community that really loves it and understands it and really wants to be a part of it but hasn't had access. That's a space that we want to be in. So right now that starts with classic cars, but everything adjacent to classic cars is a tangible asset, which are things like wine and whiskey, things like art, things like sports memorabilia and really high-end collectibles, all these things that elicit that same response, that have people really caring and talking about it, but also I've seen, staggering returns where it's really just been a one-to-one transaction of an auction house or a private collection going to one collector and then being tucked away forever with no experience around it. We want to be able to sort of really bring any asset class to life, be able to tell a story and give access to those things to everybody. And starting with tangible assets, then quickly thereafter moving into intangible assets. So things that evoke that same emotional response, things like music, potentially going to the into sort of to medical research, which is more of the delta between funding and who gets it is is a little bit weird right now.
Right.
Anywhere we can affect and disrupt those dynamics and give access to the people who care is a space that we want to be in and probably will be in by the end of 2019 or early 2020.
And that's sort of the education process, right? Like most people who walk by our showroom, it's like, wow, that's a cool car. Right, but they don't necessarily think beyond that, right? So making sure that the education process is appropriate for what people are getting themselves into, and sort of educating them on the fact that it's an asset class, educating them on the fact that you can invest in it the same way you invest in equities. Those associations and making people comfortable around those processes is sort of where we come in, and where Rob makes it look super simple and easy, and where I create the 200-page legal doc in the background. That
Max makes it legal to do so. Yeah.
That's awesome. So obviously, like, this is a pretty new area of the market. You guys are really sort of like paving a path to something that's really cool. What are some of the biggest like challenges that you guys have faced, like getting this off the ground, getting started?
I mean, I think one of them we just touched on is the fact that, you know, behind the scenes in something that you can invest in within the matter of minutes is a very complicated regulatory process, right? And sort of what we basically did was take the equity capital markets value chain and sort of say, what are the pieces that we need and how can we strip out all the rest that we don't need, but still make it look and feel to people like they are investing in equities. And so, you know, that process behind the scenes and sort of the people that we partner with and whose systems we have to plug into is very complicated, and it takes sort of a genius design mind to actually make that look pretty. But, you know, we clash on like, well, you know, you need a disclaimer here and like you need this other document here and things like that. So those are the regulated world is a hard world to navigate, and so we wanted to make that be as simple as possible, but that takes a lot of work behind the scenes.
Yeah, and there's a big difference between sort of telling a story the way you want to and sort of educating a potential member or a user as well. And I think that the network effect of that has been really helpful to us, and it's probably been the same for you. I think bringing people together in a way where you explain something where a car may have been looked at by most and usually is as a depreciating asset. Yeah. And that's been the overwhelming thesis for a long time. And the idea that real estate's the best investment has been the overwhelming thesis for a long time. So to change that and do it with a platform that isn't necessarily a household name and doesn't have that, you know, 20 or 30 stamps of approval before we had any press and before we had funding was a huge, huge challenge. But doing it in the simplest possible way and tucking, you know, the really, really complex regulatory component into a different area without having that to be sort of front of mind was always really meaningful and sort of proving that story for our users as well.
Awesome. And yeah, speaking of funding, you guys have raised money from some pretty exciting people. Upfront Ventures, Nas is an investor. For those that don't know, Nas is actually a pretty prolific angel investor, probably one of the top celebrity investors. So how do you raise money from people like that? Like, for those that have startups or are thinking about starting them, like, what sort of advice and tips would you give them for like success in fundraising and also like attracting those sort of significant value-add investors who are so hard to get in front of?
Yeah, it's a mix. I mean, so much of it has been feet on the ground. I think when we were starting this, we got a little bit lucky in that we launched an app and got some pretty decent product market fit to start. And it was a small user base to start. You're talking about in the thousands, but people actually cared and were spending money on the platform. And it wasn't something where we were thinking about revenue. We were thinking about, you know, creating essentially a live demo of the app that could prove itself and really work and look pretty. From that point forward, tech in general, it's really open to new ideas. And having worked in a couple of different areas within tech, especially consumer tech, right now the appetite for an investor, especially some of the bigger name VCs who you would think don't reach out too early, are really open to conversation, and they'll outright tell you if it's something that's not interesting and why up front through even the coldest channels for the most part. So that's like starting with a Twitter DM, ending with a qualified intro from somebody else. There's nobody that we spoke to, for the most part, who wasn't open to give opinion. And what happens is you get one or two of those people who really pay attention to what you're doing and kind of are willing to make at least a verbal bet and introduce you to a few other people. Right. And that becomes your kind of trust stamp moving forward and raising money. So for us, it was more like, you know, so much of it was hurry up and wait. It was 1,000 conversations that led to one good conversation that all of a sudden became a really hot deal and a few people jumped into. And one of those people in our earlier rounds was Social Leverage, who was one of the earliest investors in Robinhood. And then as we started to get a little bit of traction inside the fintech space, I mean, it worked out. Yeah, that one worked out. But you know, talking to like Vlad and the guys from Robinhood really early in our process, they said the same thing. Like, they had a waitlist website. It had 1 million people on it, but it wasn't necessarily easy to raise money at that point because you haven't proven anything yet. So for us, it was like build a piece of the product, build a really, really pretty deck, reach out to as many people as you could who are 1 degree of separation away, and try and build those conversations. And once we had sort of a little bit of product market fit, we had a few more conversations. We had a couple of like champions on our side who were making as many intros as we asked for. It led to great conversations. One of those was with Upfront. Another was with Jeff Cruttenden, who's the CEO, the original founder of Acorns, the founders of Betterment. So once we sort of had a little bit of steam, we kind of worked that space as best we possibly could. And it's like anything else. Once one person wants in, 20 other people want in. So that was like, once Upfront gave us a term sheet, we had 3 more term sheets and 1,000 other investors trying to come in. And then when we started to preach the message about music being an asset class, we started talking to the team at Mass Appeal and Anthony Soleil, who was a mutual friend, who's one of Nas's managers, and then Nas had a conversation about what this was going to be. it was I'll take a flyer on that because I like what they've done so far and what it will be in the future. So it's getting a few people to commit and then really reaching out and swallowing your pride a little bit and having those cold conversations really led to it paid dividends for us for sure.
That's awesome.
I have very little to add to that.
Yeah, plus they were like, but who's on the finance and regulatory side? Well, we have somebody that was at Barclays for 15 years. They were like, all right, fine. They signed the check and that was it, yeah.
So basically on like a business model standpoint right now, like is it like, so how does it work now? How's it going to work long term? Like sort of, how do you see that segue occurring over time?
I think first and foremost, it's expanding into other asset classes, right? Like we're not a car company, right? Most of the people who work here know very little, if nothing, about cars. Like I couldn't care less from a regulatory perspective if this was a car, if this was a bottle of wine, if this was a piece of memorabilia. So for us, it's sort of making sure that we as a platform are the place for all these asset classes, and then as Rob said, also expanding into the intangible ones, right? So anything that sort of solicits that response that people have, that sort of, okay, I can get a financial return from this, but I can also get an emotional return from this, is important for us. And so the way that it works today is already pretty much the way that it's going to work for quite some time, because we've already taken the pieces that people know from the equity capital markets, like IPOs, like trading, and integrated them into our platform. There'll be tweaks to that and how we do it and sort of the processes that we do them under that'll help us grow as a platform. But I think the basics are there, and that was really important for us from the beginning, right? We didn't want to create a platform like a lot of the other ones where you can invest, but then there's no real, how do I ever get out, right? Is it like 10 years later the building gets sold, or the company has to go public or something like that? We wanted it all sort of in place right away, and that was what we spent a lot of time working on in the beginning. So the good thing is that we've put everything in place already. Now it's a matter for us to grow that platform both this way and this way.
Awesome. And that's a good segue into my next question, actually, which is, I understand you guys recently sold one of the assets at a profit. Like, how do you determine how long you want to hold on to a specific car or another asset, bottle of whiskey, whatever the case may be?
Yeah, so in essence, the assets are always for sale. So one of our big goals is to really, and we talked about it a little bit before too, is get cars like this, where this one's a one of two. The other one's in Lamborghini's collection. So for us, we're making a bet based, half on data, half on intuition, and sort of like our insight into the way this platform works and the way this asset space works, that at some point when someone wants that best quality example, they'll have to come to us. So every time we put a car on the platform to this point, it's had a level of rarity or provenance or the mechanics that went into it make it that true one of one in some capacity. So as we built this collection, we started introducing features into the app that were more about marketing the car, and that's things like we're adding chat and some other elements now, but it was really bringing these on the roadshow, putting them on display in places like this, adding the ability inside the app to sort of to submit a qualified offer and see where it goes. So we're always kind of tracking that data. We get those offers, basically all day on a few different vehicles we have on the platform. Yeah. Anytime we have that qualified offer, it's something that our team checks on, make sure that the funds are in place to make a quick sale. We'll go to our investor base in each one of those individual assets. We'll poll them, get the survey and the opinion of those individual users. We bring that to our advisor board, who in this case has hundreds of years of experience in the space, and they'll say now's the right time to sell. It's at a premium. Our users have sort of gauged their vote and said they're in, and that becomes a quick sale for us. So whereas normally the auction circuit, when someone wants to sell a car like this, it might take a year and a half, it might take 2 years. You have to find one buyer. Someone has to pay for all the sort of the roadshow and the marketing that goes into it. We've shrunken that whole process down to sort of an in-app experience, similar to buying a Tesla, or something that people are used to now, where it's 2 or 3 clicks. I could be in the queue to buy this potential vehicle. And that's been a super powerful thing for us. We think going forward, as you start to sort of add more data to the platform, so much the price indicators for cars like this are backwards facing. Right. We're able to add sentiment and add that real popular opinion to it to say now might be the right time to sell. Our investor base says so. At which point, we have a lot of great relationships we've established from buying these cars to sell those cars as well. So in the future, I think we'll replicate that with a lot of other asset classes as well, where you have that data layer, you have that constant communication with users, both in-app and sort of on a one-on-one, and then you have those forward-facing indicators that say now might be the right time to sell, in which case we'll go find the premium for the vehicle.
Sounds like you gave it a little bit of thought.
It's a question that it got asked a lot before it started happening on the platform, before we started having those full exits, and now that we have that full round trip, it's become like a point of sort of conversation with a lot of new users who look at it as, this might be something that's a 3-month thing, it might be a 3-year thing, but we give you the ability to exit along the way without having to sell the whole vehicle.
Right.
But now a few people, so the last car that sold was a 2000s era Ferrari F430 for around $230,000, I think, and we IPO'd it at around 200. It traded down a little bit, so a few people sold their shares and then saw the sell at an 18% gain over the course of like 2.5 months later, and people started to realize I should ask these questions before investing in the initial offering. So we've kind of prepped a lot of those responses to this point to make sure everyone's aware of how it actually works.
Right.
Yeah.
Awesome. Well, look, I want to make sure we have some time for audience questions. That really sort of covers everything I had. Obviously, thank you guys so much for answering my questions. And
Thank you.
We'll open it up to the audience. Does anyone have any questions about Rally Road, alternative investments?
I have a question. So you sell one of your acquisitions. Now, when you're issuing the shares out or redeeming them, are you doing a K1 or is it a 1099?
It's a 1099 because we wanted to make it as simple for the retail investor as possible. So even though this is technically an LLC, we have it taxed as a corporation. So not as efficient from a tax perspective as one might want to be, but much, much more palatable for the majority of people who don't live in the investing world.
Part B.
Okay?
It's gonna get good now, it's gonna get good.
The shareholders, so if you're doing it as an LLC, is it possible they'll realize a loss on the other side? Of course, if you sell, you say, this is just taking up our inventory, it's taking up our capital, we've got to move it, clearly understood. However, will they be able to capture the loss actually since you're the LLC, but they are not?
They would capture the loss, right? So on their 1099, they would have their basis of where they bought in, and they would have their basis of where they sold out. And so if there was a loss generated by that, you would be able to realize that against your other taxable income.
Thank you.
You're welcome.
I have a question. So, a vehicle like this, for example, if someone invests into it, and let's say someone else invests into it, that's possible, correct?
Yeah, so this particular car in this space has 938 investors at $127 a share. But now, I believe next week this actually starts trading, or June 6th, I think is the first trading day for this vehicle since its IPO. In which case we'll bring all the buyers and sellers into the room, and you potentially sell your shares at the price that you feel. You'll put it up as an ask, and the price that you feel is sort of the meaningful return for you. We'll sit there and wait for a buyer to come and take that from you, and we sort of facilitate that as a one-day trading window. So.
No, what I was getting at is if I want to make an investment in a vehicle that you have, and there are other investors in the vehicle, and I want to, let's say, I guess buy out the vehicle itself. What is the process of me doing that?
Yeah, so that's.
Let's say he's an investor, she's an investor. How would we work out that if this is the car that I want?
Yeah.
And I have none of the forms.
Well, if you have Apple Pay, I'll do it for you right now. We can go in your bag. If you got $635,000 on it, I'm sure all those investors are in. But gotcha, different one. Yeah. But. I got one tucked away somewhere, I think. We might be able to make that work. But yeah, I mean, anytime that we sell it, like if you want to buy all the shares and take possession of the actual vehicle, it's essentially like a hostile takeover of a company. So if you wanted to buy if you wanted to buy Tesla right now and it's trading at $185, it would probably cost you somewhere in the mid 200s. It's not that dissimilar from this.
But is that?
That's in the app right now, so there's the ability to do that.
I guess my question is, if there's multiple people who have value in the vehicle.
Yeah.
And I want the vehicle to myself. Like you said, that's a hostile takeover.
Yeah. So you would submit.
How does that work with the other
So
investors? Because I don't want to shadow the other investors on what they have on the car just because I want the car.
No, it's got to become yours. So for sure, it's a good question. So the way we set it up is that if all these shares right now, the last trade was $127. If you wanted to sort of take possession of this car and you're an investor, even at $127, you'd have to buy up all the shares. You would submit either a range or the price that you're willing to pay for all of those shares. We take that number, bring it to all the investors, explain to them what their payout would be at that point. We give a survey, so at which point if we're getting 80% approval on that, it's on us as the advisors and as sort of the maintainers of this vehicle to take that offer. It's our fiduciary responsibility at that point to pay them all out with what you're paying per share and then bring you and deliver you the vehicle, literally.
Would you be doing that as a negotiated
Yeah, exactly.
Like a,
So like if the people who have bid on the car,
Yeah,
who have stock in the car,
yeah,
come together and say, you know what, I don't think we want to give him the car.
yeah. That could happen. That could happen.
So yeah, and that can
Yeah.
happen.
So even it actually did happen.
So what's the procedure there?
Yeah.
Because if I'm saying, listen, here's this for the car, take it.
Yeah.
But, you know, they have stock in the car. I would say I can't take the car for mine.
Nah, for sure. I mean, that's why it has to be a significant enough premium. We always qualify first. So if you said at $127 a share, if you said, I want to buy every share at 140, that's something we would package up as sort of a little, we have like an investor website that we set up for each individual vehicle where they place their vote. We always make sure, because our job as the manager of this vehicle is not just to solicit those offers potentially and get all those investors paid out. It's we have a fiduciary responsibility that if a significant premium comes into the last share price, to at least tell them what's going on, but to probably, in our mind as manager, take that offer as long as it's qualified and make sure you get your car and they get their payout, because
Are they giving the opportunity to match that?
they are, but it's not something it's not prevalent in that sort of voting mechanism. We're surfacing the actual price. If someone came in with a qualified offer above you, they'd have the right of first refusal. Essentially, we'd have to go to them with it. But yeah, I mean, but offer stands. If you want this car, let me know. We'll talk afterwards for sure. Yeah.
I get one Mustang.
Specifically regarding, you said that you're going into like whiskey and other categories. What other specific categories are you going to be going into?
So we've got a couple on the roadmap that we've identified, right? So it's wine and whiskey, it's watches, it's memorabilia. Rob mentioned music rights and sort of intangible asset classes, but ultimately, like all the things that are going to show up on the platform, what asset classes we get into is also something that we want to involve the community in as much as possible, right? Because there may be things that we don't even know about that have value for a very large group of people that would be relevant for our platform. So for us, it's really that we're building all the pipes and the way to do this. And then if someone comes and says, you guys should really be investing in stamps, as a category, and there's a good argument for that, then that would happen eventually on the platform. Everything that we do is super templatized, right? Like the process for taking a car public is the same as the process for taking a watch public, etc. So we don't need to do a lot of work related to what the asset is. We would just need to know that these are assets that other people are interested in.
Now, regarding cars specifically, if I don't understand cars, would I be able to do you do research? Like, would I be able to assume that if I invest in a car that's available through Railroad, that it is a safe investment?
Yeah, absolutely. So the way that we set up all these offerings is essentially this is a company that owns this one asset and operates this one asset, and that's done as an SEC qualified offering. So our first sort of stamp of approval was we could have gone sort of the blockchain route. We could have done something that was skirted regulation to get it done quickly, but we spent the first 18 months of this platform, essentially paying lawyers and going through the process in the most meaningful possible way to ensure that this was treated like any other investment, even on a big platform. So anything we get from Charles Schwab, any sort of alternative investment, would kind of look and feel very similar to the way that we do it. And then along the way, transparency has been a really, really big and important part of what we do as well. So we surface everything inside the app at a glance to start, so it looks very much like a magazine, and it gives you a little bit of pop culture reference. It tells you a little bit about the history of the car, it gives you a timeline. But front of mind is also a few buttons that speak to sort of the legalities and the specifics around it. So the first button you see when you go inside of each app, each individual portal for these cars, it says legal. It's a 180-page to 500-page document that has everything that's ever happened with the purchase of this vehicle, the risk factors associated with it, every single detail. It would take hours to read, but a lot of people do wind up reading the whole thing, especially that we have a lot of we have a lot of lawyers on our platform. We have a lot of financial professionals. We have people that really understand what that means, and they'll go to that spot in the document to make sure that exactly what you're saying is front of mind too. So that the safety aspect, the idea that all these deposits are FDIC insured, which is true. The fact that it's SEC qualified, each individual offering is its own piece, has its own risks, everything's surfaced, that's true. So everything we do in the app is about transparency, and the big thing that we do as a company as well is that we invest out of operating capital up to 10% of the vehicle at the same price as investors in the same method as well. So we have skin in the game the same way out of our bank account. So, we're trying to make sure that people know we're acquiring assets that we truly do believe in, and that, the way we make money right now, because we don't take any commission, we don't take any management fees, is by playing the upside on some of these vehicles. So we want to make sure that's sort of front of mind as well.
Specifically, my last question is regarding, I'm like an Android fan. When is an Android app going to
That's good. I've gotten that question for the last year. It's the right question. I think we might have we might have solidified our new Android hires today. I got to check in back with our CTO tomorrow. But it's been something that I'm pretty sure, based on the conversation with our board, if I don't get it done in the next 2 months, I'm not going to be here to talk about Android anymore. So if I don't want to give a hard date, but within 2 months, I would think we have a really robust web product and an Android product that's done natively in the right way.
Was NAS's interest in securitizing the musician or securitizing the actual song?
Yeah, so when we talked to him the first time, he was doing a live album at the Griffith Observatory, and he was going to do like a 10-song LP that had vinyl and had like a 3-city tour and had all these little elements. We were going to securitize the whole thing, and he had a situation with his deal with Def Jam, I believe, that prevented him from doing it. He had one more album that he owed them, which is still in flux right now, which they're finishing up. And the idea was to build experience, to build everything around it, where for him, he wanted to do something where it was like the live performance aspect, the merch, the ability to sort of follow the tour, any of the streaming rights, all that stuff was packaged up as one investment that had this.
We get dividends?
So potentially pays dividends. So that was the idea, is that it's this cash producing asset that has the short-term shelf life of like that, whatever that 1-year rollout looks like, but the long-term shelf life of the music publishing rights that go along with it. And that's still something we're trying to work through right now. So the easy one for us to start would be like an individual song as one unit, and that's kind of like very similar to the car. The bigger picture for us is taking sort of somebody who maybe doesn't want to go the major label route. They're a new artist with a really strong following, and they might have people that, super engaged fans that show up every time they do something, but now you're making the bet on this person's career in a way that they sort of dictate what their price is and what the publishing rights are worth to them. Instead of doing a predatory deal, they're doing a full 360 deal that really allows them to set price and sort of dictate that the real fans get access to the upside. That's kind of where we want to go with it, I think.
Yep.
So thank you for introducing us to this asset class. Just reading that, I have no doubt that the best performing classic cars have outperformed traditional equity, etc. My question is around scalability, right? You've found this individual car, $127 per share, 100% return, $127, even multiply that by 10, right? It's significant money, but how do you, in these kind of more unique products, make it scalable and ensure that the returns are, significant enough that outside of personal interest, you want to put real money against it?
Yeah, so everything we do to this point has been this mix of data intuition, and we're moving more towards a data model. So I think a lot of what we're doing is acquiring best in class, but also acquiring vehicles like this, where the interest level is high enough now and will continue to be high. So something like this, we make sure that we bring all the buyers and sellers together on something that's really meaningful, but at the same time, this is something that the way we've tracked out the schedule for this vehicle, knowing that we'll probably, in a long term, want to own it for around 2 to 3 years, as the data suggests, as sort of the algorithm in the background suggests, but also the fact that more of these are coming to market similar, not this one, comps that'll go to auction, that'll get new insurance values, that'll have activity around the space to make sure that it's a healthy market. Where it goes from here is not something we can predict, but we can predict the fact that this will be an active marketplace for that 2 to 3 year window that will have the vehicle. What we also do is we want to turn everything similar to the album concept into a cash producing asset. So what we've done with a car like this is that we built this little space out. This space will expand all the way to the back at some point. We'll host more events. We'll do more merch. We'll do more sort of sponsored content. We'll do things around it that allow us to put money in the bank account for this vehicle and pay those dividends along the way as well. And now we're at a point that every time we do something new with the app, or with new products, or with new vehicles, we kind of do it ourselves first to prove the model, which we did with the app when we raised money, which we did with this space. But going forward, the ability for us to partner with a hotel or with sort of a movie studio or with somebody who wants access to the fleet and to these best-in-class assets allows us to sort of really generate cash flow around them. And even though we have that sort of setup where that activity will be around it to produce that sort of a little bit of speculation, but also a little bit of sort of understanding of what this vehicle actually means and the fact that it is kind of undervalued right now, we'll have sort of this ecosystem around it that always generates cash in the bank account to pay off those dividends along the way as well. So that's how we look at the long term for us.
And we're also still at sort of a very low level of investment, relatively speaking, right? Like I wouldn't never be able to afford this car, but this is, in the grand scheme of things, a relatively cheap car. There are cars that are valued, close to $100 million, and there are, quite a few of them. So, between cars and between all the other asset classes that we will be able to get into, like this is just sort of the starting point, right? There will be hundreds of $millions of investable assets on the platform. They will range across all these other asset classes. And for us, really, like we said in the beginning, it's not necessarily to attract the fanatics in this particular space. It's to attract people who are first and foremost investors and who want exposure to this kind of stuff. And whether or not there's sort of an institutional investor product on top of that at some point, and how diversified it gets and sort of what all the other financial instruments that we can build around this are, that's yet to be determined. But there's nothing that stops us from sort of a regulatory perspective from recreating all the other parts of the equity capital markets or from the financial markets in general that are out there for these asset classes, right? So having an ETF on top of the platform or having an index fund and making it less about building a portfolio of specific things and more about investing in the asset class broadly are all things that are on our roadmap and are all things that are doable in sort of our current environment.
Last question, I think.
So just a practical question. Since we're dealing with physical investment, are the cars insured? So let's just say there was a break-in or anything like that, and it was a crash or something where the asset was actually destroyed, where the investor would be protected in that situation.
So the insurance contracts are actually quite cool, for as cool as insurance contracts can be. Basically, they adjust to the market value of the car, right? And they're always for full replacement value. So the people that we insure this with know that if someone like kicked a dent into the door, that would be a meaningful enough damage to the car to sort of have full replacement value rather than just like knocking out the dent, right? And so basically, if this car goes from its $635,000 market cap to its $800,000 market cap, the insurance contract would adjust accordingly. And in a catastrophic event, the shareholders would get paid out market cap.
Does that cost come out of the LLC?
That cost comes out of the LLC at some point when these cars become cash flow positive. But because we're negotiating things at fleet level, we're already at sort of a very, very low insurance premium, lower than you would ever get as sort of an individual.
Distribute that pro rata?
We would distribute that pro rata, yeah, if there's a payout. That's just like when we sell a car, everything gets distributed pro rata without sort of a cut coming to us. Insurance value gets paid out pro rata as well.
Cool. Well, thank you guys.
Thank you.
Informative. It was a lot of fun. And then do we want to mention?
Yeah, so we're going to also, for everybody here, we're going to drop $50 into your account, sort of first investment, hopefully get you involved at a pretty meaningful level for a lot of these vehicles. Some of them start as low as $5, so to have some exposure, to understand the platform a little bit, and hopefully become members of the platform with a lot of really great stuff to come. So check for that over the course of the next day or two. I think we'll sort of make sure it gets distributed out.
Awesome.
Thank you.
Great.
Thank you.
Guys.
Thank you guys so much. Sincerely appreciate it. Thank you.